My name is Mark McLaughlin and I'd like to talk to you today about HMRC tax return inquiries and in particular HMRC requests for meetings with taxpayers during the course of those inquiries. Now, meetings with taxpayers are quite a common feature of tax return inquiries, especially for self-employed individuals and company owners. The revenue actually favours meetings with taxpayers in tax return inquiries, and in fact in the Revenue's inquiry manual its guidance to HMRC officers does state that meetings with taxpayers should be encouraged and should be sought if at all possible. Now, there's no obligation to attend meetings with HMRC officers generally, so the question arises therefore, should the taxpayer actually attend a meeting or not? The answer is it really depends. First of all, is it really necessary for the taxpayer to attend? Would it really help the course of the inquiry if the taxpayer actually turned up? It may be that the inspector already has all the information that they need, or that the taxpayer's advisor may be able to provide the information themselves. So that's a point to consider. Secondly, it may be better in some circumstances to have a meeting between the HMRC officer and the taxpayer's advisor, and just to exclude the taxpayer, because the tax advisor may be able to deal with all the HMRC officer's inquiries anyway, especially if they are technical questions that the inspector is asking, or they are accounts based where some accounts knowledge is required. So it may be that the taxpayer's advisor can actually take the place of the taxpayer in those circumstances. Thirdly, it's necessary to take into account the taxpayer's feelings about a meeting. A meeting with a HMRC officer can be quite a daunting exercise, and the taxpayer may not feel quite disposed to have a meeting, may prefer not to have one. That's generally fine. Another factor to consider is the costs involved in having the meeting, and to bring the taxpayer away from his work in order to attend it. So that's another factor to consider, and it may be that taking all these factors into consideration that a meeting is not considered to be desirable. Now, if that conclusion is reached, it's important to draw the inspector's attention to the fact that full cooperation will still be given in the inquiry, but that the cooperation will be given in the form of telephone calls and also correspondence. The reason why that's important is because if in the course of an inquiry an error is found in the taxpayer's accounts or the taxpayer's return, then if the question of penalties ever arises, the taxpayer's cooperation will be taken into account as a mitigating factor in the calculation of those penalties. Now, if a meeting is accepted, there are certain points to consider and take into account. First of all, it's important to get a detailed agenda off the HMRC officer in advance of the meeting, so that the agenda can be run through with the taxpayer, and also to make sure that there are no unpleasant surprises with additional questions being asked on the day of the meeting itself. Secondly, the venue for the meeting. HMRC officers tend to favour the taxpayer's premises, particularly if the taxpayer is self-employed or a company owner. However, in my experience, probably the best place to have a meeting is a neutral venue, such as the tax advisor's office. And it may be that the taxpayer's been to the tax advisor's office on a number of occasions and probably feels quite comfortable having a meeting there. So that would be my personal choice in most circumstances. Now, following the meeting, HMRC will generally provide notes, and they send a copy of the notes to the taxpayer and the advisor, and ask them both to approve the notes and possibly even to sign them as well. Now, in terms of signing them, I've never been in favour of getting the taxpayer to sign the notes, but it's usually a good idea to get the taxpayer to review them. There is a case that HMRC sometimes refer to called Duffy versus IRC, which the Revenue used as a cautionary tale. In that case, basically, there was an inquiry into the taxpayer's return, and there was a meeting with HMRC, and subsequently after the meeting, a dispute arose as to what was actually said in the meeting. The taxpayer disputed a point that he made, the case went to the Special Commissioner, and the Special Commissioner made the point that he had the opportunity to check the notes and to make any corrections at that time, but that he didn't actually do so, and that went against him in the end. So I hope these points have been useful to you in connection with HMRC inquiries and meetings. My name is Mark McLaughlin, and thank you for watching.